watching Business Today television. This is Market Today, and I'm Sakshi Batra. Well, today's show is even more special because we are celebrating Women's Day. So, here's wishing all our women viewers a very happy International Women's Day as well. Today's show, we will actually get to the top market voices, women voices who will be helping you out deciding the course of your own investment journey when it comes to stock market investments. So stay tuned. There is going to be a gala time that we're going to be having. Remember, the markets have already started to tick after 2 days of gains, slightly in the red, 0.5% lower as far as the pre-open trade is concerned. This is the implied open for the Nifty, which will open at 9:15. 22,420 is the current level at which it is indicating that the Nifty will open at. But remember, as of yesterday, we've already conquered 22,500 on the closing basis as well on the weekly options expiry session, which ended on a positive note with 12 lakh crore rupees worth of investors' wealth over the last two trading sessions coming back to their fold. You can also see the markets further turning into the green as we inch closer to 9:15 now, 22,587, and that's the kind of move that we are seeing. So back into the green, and let's hope that this one stays. Remember what happened yesterday was we did see the oil and gas, the metals, the commodity stories really, buzzing in trade, and that was on the back of cooling dollar that continued to lead to a rally in the metal stocks. Falling crude oil prices also spurred the stocks like Chennai Petro, MRPL, oil marketing companies like IOC, HPCL, BPCL as well. In fact, the metal index is up, 8% this week, positioning itself for the best weekly up move in 4 years now. What is also important to understand is that 7.5% move on the higher side for this week so far has been already seen for the oil and gas index as well. But the big question is, when do the bears really step in? Have they actually exhausted their selling? Have we made a bottom in the markets, or are the bears really waiting for the prices to really move up further higher to come back in and short the index at higher levels? That's something that we are in a flux, and we'll try and understand that from our top guests who will be joining in. Remember, the bulls would definitely want that after 2 days of gains, we should also end Friday on a high note to have a great weekend going forward from here. What are the cues for today? Well, remember, the markets have been unresponsive on the Wall Street, even as Donald Trump delayed and postponed the Canada and Mexico tariffs to April 2nd now. But despite that, we actually saw the Wall Street indices end in the red. And that's exactly what we've seen across the board. S&P 500 was down in trade by 1.8%. We saw the Nasdaq also declining by sharp 2.6%. We saw the Dow Jones ending nearly a percent lower as well. In fact, the S&P 500 did respect the 200-day moving average, but the Nasdaq has actually entered into a correction zone. It's down 10% from its peak too. So that's really something to important to track. Asian markets this morning are mixed. Chinese index was down 0.1%, Hang Seng up by 0.1%, Nikkei down 1.8%. We have the Kospi that's down by 0.4%, and the Gift Nifty trends are still holding up at this point in time, and that's what is the indication for the Nifty at this point, that we could have an opening above 22,500. Let's hope that continues. Right now, it's very, very volatile in the pre-open trade. Again, we are back in the red. 22,471. So what we'll do is, instead of looking at this price on the Nifty, we'll just have it settled down, and we'll look at, what should you be really keeping in mind. Let's welcome our first guest on board. We already have with us Ms. Sneha Poddar, the Vice President and Research Analyst, BNT at Motilal Oswal Financial Services. Warm welcome to you, Sneha. And yes, wishing you a very happy International Women's Day in advance. We are celebrating Women's Day today, of course, on Business Today television, which will continue over the weekend as well. First up, tell us, what's your own sense as far as the markets go after 2 days of gains coming back on the street? Does that instill any confidence that probably we have a worst that's behind?
Very good morning, Sakshi, and wish you and all the women viewers, traders, a very happy Women's Day. With regards to market, what we believe is that this could be a short-term bounce that we are witnessing, because there are a lot of uncertainties at the global level. With the Trump continuously flip-flopping on the trade tariff front, and I mean, the kind of pressure it's creating on various countries. So there's a lot of uncertainty which is there. So that will keep the markets volatile. And today, with the US non-farm payroll data due to come in the evening, so obviously, there's some sort of cautiousness ahead of that data, because it holds a lot of importance for US Fed to take. I mean, like, it for the next decision. They really keep this data in mind. So volatility will be there, and probably this should be seen more as a short-term bounce. The I mean, though we are in the last leg of correction, but still, the swift recovery from here is still far off.
Okay, swift recovery from here is still far off, and this could just be an interim relief that we have actually seen in the markets. Let's actually look at some aspects then. Have the recent 4 5 months of consecutive decline in the markets given you some opportunities to accumulate at this stage? Do you think for those who are actually penciling in a recovery in the long term, this may be the right time? To see that whatever funds you have, you may slowly and gradually start deploying, and where exactly should that be?
Oh yes, actually, because see, I mean, we have witnessed a very healthy correction from, I mean, continuously for last 5 months we're witnessing correction, and I mean, on the Nifty front, we have already corrected almost 17-18%, whereas on the mid cap, small cap front, it's a much larger correction. So valuations do provide comfort now. In fact, on the large cap front, we are at par with the, or at a slight discount to the long term average. Though mid cap, small cap, we are still at a slight premium. So, but still, having said that, there are pockets of opportunities which one can look at. So, as I mentioned, this is the last leg of correction that we are witnessing. Nobody knows where the bottom will be, but one should actually now start accumulating in a staggered manner, and this is a very good opportunity to accumulate for the long term, because I mean, such attractive valuations. It's a rare, occasions when we get to see such valuations. This was last seen probably during COVID time. So one should definitely take do cherry picking and build a portfolio around it.
Okay, fair point. Let's actually look at a few pockets then that have been in buzz all across this week. That's been the metals and the oil and gas story. So let's take them up one by one, Sneha, with you. One, what do you make of this near, 10% kind of a rally that we've already seen in the metals? Probably the biggest rally that we've seen in 4 years or so, with the kind of move that we have seen. Of course, a lot of it also has to do with the kind of support that it was getting globally in terms of demand in China, economic growth projections that were again kept intact, stimulus coming in. But this space has actually been extremely volatile, and investors are, unable to understand whether this is a space that will continue to test their patience time to time, or should one actually, is it a space that you put in money and you forget it for about 5 years?
See, I would treat metal still as a trading bet from a short-term perspective, because the kind of uncertainties which is there at the global level,
Yeah.
and we still really don't have much clarity with regards to tariff, how it would play out over next 1 month. So I would suggest to given that the positive news that are coming in from the China front, and the tariff impositions and all. So, I mean, short term, definitely these are positive for the metal sector, but let the dust settle down, because this is a cyclical sector, and it's completely driven by the global factors rather than domestic factors. On the domestic front, things are favorable for the metal sector, because after a long time the capex has revived, and the government is, I mean, both the private capex and the public capex has picked up very well post the budget. So, from the domestic demand perspective, the demand is very strong, but then it's more from the global factors play a much important role compared to domestic in case of metals, which is very uncertain. So one should look at it from the short term point of view only.
Okay, fair point. So I hope this has also given some sense to all the viewers who are looking at the metal story. What about oil and gas? So the crude oil prices now are falling below $70 a barrel. There is an expectation that OPEC Plus will again increase supply from here on. They are reversing the production cuts too. What does this mean for the medium term itself from the oil and gas perspective? I mean, OMCs have also presented an opportunity to investors to create wealth in the recent past rally that we had seen. Does this space still look lucrative to you?
Okay, so see, in oil and gas, you'll have to look at it from the two angles. I mean, with the oil price correcting, obviously, like, ONGC, Oil India type of companies, they will not benefit. I mean, for them, it's a little on the negative side. But oil marketing companies would definitely gain out of it because their overall marketing, margins will improve. So, with the the sanctions removed on Russia, so there the supply is coming in, and the OPEC is also raising the production. So, the oil prices are likely to stay at the lower levels, and with no price cuts expected in India as such. The oil marketing companies will definitely stand to benefit. So, from a medium term perspective, yes, we can stay constructive, and in this we would prefer HPCL, wherein their I mean, overall the strength of the business is much better compared to the other companies, and the kind of capex that they have in plans, and with the new capacities coming commissioning in the coming fiscal, so their growth will be further supported by it. So HPCL would be the preferred pick in this space.
Okay, got that. I hope that's also given some sense to all our viewers with respect to what can be expect in the commodity basket. Let's talk about a few stocks then, Sneha, and then discuss as to what are the opportunities for investors here. Well, BEL has been in focus from the PSU space. It's been showing us some momentum. Again, it's bagged about additional orders of 577 odd crore rupees, taking the total order flow for the fiscal year 2025 to over 13,724 crores. Again, there is an indication that there could be an 1% uptick. Tell us what's your expectation on the entire defense space and stocks like HF and BL, which have been showing some reversal trends.
Okay, so defense, we are positive. See, what really happened was post budget, because in budget there was no mention as such on defense. So sentimentally, it played out as a negative thing. But and even the valuations were a little stretched after the continuous rally they had that we had seen over past 2 years. That correction was due in the defense space. So that was a healthy correction. But having said that, though in budget it was not mentioned, but then when we looked at the details, decent 10% allocation has been increased for defense, and the government is quite serious with its spending on the defense front. So, a defense sector one can look from the long term perspective, and in this we prefer Bharat Electronics, because their order book has been very strong for FY25, and in fact, with this recent order that they announced today, they have already almost reached 14,000 crores of order inflow for FY25. So that's a it provides very good visibility, and overall, if you look at BL, they have been very smartly diversifying from the defense to non-defense vertical as well, to create a balance. So almost, 60-65% still comes from defense, but good 30-35% is coming from the non-defense segment. So that provides a good diversity, and a support to the overall revenue. So definitely one can look at this counter, and from a long-term perspective, we have a target price of 360.
Fair points. There we are going to be looking at the markets open. And before I thank you, I have to ask you, today's Women's Day, and we've specially brought you in. So for our women viewers especially, what are the stocks that you would recommend?
Okay, so for women viewers, I would recommend Indigo and probably Tata Consumer.
Okay.
These two stocks can be looked at from the long-term perspective.
All right. I hope all our women viewers have actually taken that now. Thank you so much, Sneha, for being with us on the show. We've started on the back foot as far as the markets go, viewers, and we'll just look at the market opening now, and then we will have another special guest joining in soon. 22,480. You can see on the Nifty, there is a 69.70 point of a cut right at the open. This was already getting suggested by the GIFT Nifty trends earlier, 0.3% lower in trade. The Nifty Bank at 48,491, 135 points lower, 0.2% of a decline on the Nifty Bank is what you already have for today as well. Let's actually look at the mid and the small caps to see if there is any momentum on that front. on the higher side. Remember, those are the pockets that have been actually also seeing some recovery of late, but the mid caps are also on the back foot today. 0.4% of a decline is what we can see on the Nifty mid cap index. Small caps slightly better off. Remember, yesterday they were the outperformers even in the broader markets. 0.03% lower, so just below the flat line is what you see the small caps trading at. Let's actually look at some of the big heavyweights to see how those are also trading. Let's look at Reliance Industries that did manage to give some support to the markets yesterday after a long haul. Again, another day, and you see a half odd percent uptick, so 1215 right now as far as Reliance is concerned. Let's look at the banks, which have been rather on the back foot over the last few days of a rally, especially HDFC Bank that continues to reel under pressure even today, about 0.4% decline at 1684 at this point in time. Let's look at ICICI. So this was in contrast as of yesterday, but even ICICI Bank is opening in the red today, 0.3% lower, 1214 is what you can spot. Let's also look at the Axis Bank stock, however, is holding up strong, 1041. So mixed trend is what we can spot as far as the banking names are concerned. Let's look at IT then. IT again has been under pressure. It was the weakest index as far as yesterday is concerned. So TCS about 0.4% lower, still on the back foot right now. Infosys, Tech Mahindra, all of them are also on the declining side. 1.5% nearly loss for the Infosys counter. You also have Wipro that's also declining in trade. The advanced decline ratio also is even Stevens 1081 as far as the advances are concerned, whereas 990 on the declining side. You have the major indices that are actually falling behind in trade today. So some kind of gains that we had seen are kind of reversing. You can actually see more declines on the Nifty stocks as well, whereas the gainers are limited to a few stocks on that front. Let's look at the top gainers on the Nifty and you will get a sense of how the stocks are moving on the high side. The Nifty, by the way, is now turning green. So a few minutes of volatile trade and we are back into the green. Let's hope that it improves for the better. You have HDFC Life, Adani Ports, SBI Life. So the insurance names are definitely garnering some traction in trade today. You also have Hindalco from the metal pack that continues to rally. Reliance, of course, Bajaj Auto are some of the names that are holding up. But let's welcome our special guest for Women's Day on board now. We have Shibani Sarkar, Senior Executive Vice President, Fund Manager and Head of Equity Research, Kotak Mahindra AMC, joining right in. Warm welcome to you, Shibani, and thank you so much for taking the time out. We are celebrating Women's Day one day ahead, and we will continue to celebrate through the weekend as well. Happy Women's Day to you. And I hope that you continue to inspire a whole lot of women into their investment journey, just the way you have been. And I want to first start off by asking you, what's the biggest investment tip that you got in your own life, or you have, probably gotten an inspiration from, so that you can pass that on to all our women viewers today?
Hi, good morning. Wonderful to be on your show, and a very happy Women's Day in advance to you and to all the viewers out there as well. So I think one of the biggest tips, or possibly advice, if I may coin it that way, that I have received is that every bit counts in terms of how you start your investment journey. So what that means is sometimes we believe that especially when we are starting off young, we are not able to save much, and we believe that a small amount doesn't really matter in the longer run. But that's where I differ. Every small bit of savings and that which you invest makes a long difference, and especially in the long term, that helps you create wealth. So therefore, I would say start early, start saving, and saving is not just enough. You need to save and invest, and that's how you create wealth in the long run.
Right. But when we talk about stock markets, there is so much more awareness today than many years ago. A lot of women, earners, they want to now use their money, take their own decisions as well, even if it is, toying with the idea of riskier assets, which have been always seen as like equity markets for that instance. I see a lot more women wanting to look to trade. Even my mother, she used to tell me that, I have retired now. Can you tell me how do I start trading? I can just sit at home and I can start trading. So, I had to really tell her that, it does not work like that. You have to first understand, why don't you start with mutual funds first? But, what is it that you advise to all the women who really want to, invest in equities? What would you say?
Yeah, so one key mantra that I always keep in mind when I'm investing or when I'm looking at equity markets is time in the market is far more important than timing the market, which means that you should invest and not trade. Trading is something that requires a lot of skill, research, etc., and therefore look at investments on a more disciplined long-term approach. The second factor is look at your overall investment philosophy, look at your asset allocation in line with what your goals are and what your risk appetite is and what is the time horizon that you are willing to invest for. And therefore, your asset allocation strategy has to be based on those key parameters. The third aspect that I always keep in mind is that there are three key buckets that you need to plan for when you're looking at your overall financial planning. First is, your risk mitigation, where you need to have insurance for term insurance or you need to have a health insurance. The second is have a bucket, which is your contingency bucket, where, life is uncertain. You never know when you need a plan B or a contingency fund, and therefore keep some money, which is can be invested, for instance, in liquid mutual funds, which helps you in times of need. The third bucket is your long-term investment planning, where, as we were discussing, depending upon what your investment goals are, decide upon an asset allocation bucket between debt, equity, gold, etc. Always remember that invest for the long term and stay disciplined. And one thing that I always possibly discuss with most of our investors, though it's been said very often, but I still believe that SIPs is the best way to keep investing and stay disciplined in terms of long-term wealth creation.
That's a wonderful way to put it, and I hope this has really gone, benefited a large audience of ours who are still thinking as to how should you be beginning to manage your finances and where should you begin when it comes to investments. SIP continues to be a great way. Start by that, see how your risk appetite is, and then probably look to a financial expert to guide you through in case you really want to invest in your stock market journey, direct stocks. If you do not have that much knowledge, please take financial, experts' assistance. That will really greatly help you. Otherwise, mutual fund experts, fund managers are experienced to help you out to create an alpha when you cannot do that in any cycle of the market. Talking about the cycles, let's talk about the current situation in the markets right now. Shivani, what is the sense that you're getting? We have had 5 months of pain, 10 days of record lows on the Nifty as well, the longest losing streak since its inception. Now, after that, there was some sign of reversal. Was it a dead cat bounce, or is there an indication that probably the markets have made a bottom?
So, it's always difficult to time the market exactly and say when is the exact bottom of the market. But if you just look at the way the markets have behaved since possibly November, December of last year, we've seen that considerable amount of the volatility being driven by both domestic as well as global factors. Now, some of these uncertainties still remain in the market, and that's something that we need to take cognizance of. So, especially when it comes to global factors, which include geopolitical risks, the tariff-related uncertainties, some of them still exist. On the domestic front, I think one of the key drivers for our markets have been corporate earnings. And as we have discussed earlier in your show, last couple of quarters, we've seen corporate earnings come off. And therefore, for our markets, Q4 and then Q1 of next financial year, in terms of corporate earnings, will have a significant bearing. So that's something to watch out for. Now, when you look at the market construct, clearly the headline indices have corrected, but at a stock level, we've seen correction being even sharper. And today, when you look at valuations across different segments of the market, the Nifty, which is the large cap index, is now trading at multiples which are lower than its long-term average. Also take into account the kind of changes that have happened at the Nifty index constitution level, where over the last 5-year period, a number of private sector companies have come into the index, as well as number of B2C companies have come into the index, where typically valuations are higher. Keeping all of that in mind, today our belief is that large caps are trading at multiples where risk reward is favorable, and therefore the bent of the portfolio is more towards large cap. Mid and small caps have clearly corrected, and as I was discussing earlier, the stock level correction has been even steeper. However, there we would still have a more cautious approach and look at stock specific opportunities in the mid and small cap segment. So net, there are some segments of the market where valuation correction has been quite steep. And overall, our belief is that large caps are still better placed from a risk reward perspective as compared to mid and small caps as a bucket. And within the mid and small cap segment, go more stock specific rather than look at the entire segment.
Okay, got that. Now, Shivani, I want to also get into sense, a large part of this correction also has to do with, the changes in the policy decisions in the US, the mother market as well, and what could that mean for the global economy at large and for global markets, including India. Off late we've been seeing a heightened action on, Trump tariffs, and that's on an everyday basis. We are getting an updated statement, and the markets are reacting that way. Tell us, in your sense, for somebody who's a long term investor, how much importance does one need to really give to their own core portfolio, the way they are investing, looking at the kind of market reactions that we are on an everyday basis because of these external shocks?
Yeah, so I think, after having spent more than 2 decades in the equity markets, one factor that I've learned is that there is a lot of news daily and there is a lot of market volatility. Being an equity market investor, you have to be prepared for volatility. But when you look at markets over the last 2 decades, despite very severe shocks that our market has gone through, over a period of time, there has been wealth creation. So, for instance, we've gone through the 2007-8 period, the 2013 period, 2018 and 2020. And these have been severe shocks that have impacted the market. We are now also going through a period of turbulence, primarily because of geopolitical risks, some of the uncertainties related to tariffs, etc. Having said that, when you look at Indian markets, there are a few key things to look at. One, when you look at FY26, corporate earnings growth is expected to revive and be somewhere in the mid-teens, which is what the consensus is building in at this point in time. So hopefully FY26 will be a better year from an earnings perspective. Secondly, if you look at GDP growth, we continue to be among the fastest growing large economies of the world. The third factor is corporate sector balance sheets as well as banking sector balance sheets are possibly the healthiest that they have been in the history, which means that leverage is extremely low. So, despite the fact that there is global uncertainty, India corporate, in terms of their balance sheet health, is possibly very, very well placed. So, there are structural positives from the market construct. And in this sort of a market, in order to navigate volatility, one needs to look at a few key factors. One, earnings visibility becomes extremely important, and therefore look at companies where you do have earnings visibility and look at those particular segments. The second is don't chase momentum, look at valuations, and reasonable valuations become extremely important. And the third factor is look at companies where there's adequate liquidity, where free float is high, and where valuations are not elevated just because of lack of liquidity or low float. So these are some key factors that we are keeping in mind. And net on a construct perspective, we still believe that large caps at this point in time are still better placed than mid and small caps. So that's how we are really approaching the market. Of course, the near-term uncertainty with respect to tariff is likely to continue for some time, and that's something that we will have to navigate.
Okay, we'll start looking at some of the key sectors and themes, and you could probably guide us as to how things may shape up for these particular sectors now going forward. What we've seen is, at least in the banks and the financials, there has been relative underperformance when it comes to the overall markets right now. Even when, at the beginning of this calendar year, the consensus space that everybody was looking at for reversals is the banking and the financial space as well. Do you think this is giving us a good opportunity to start accumulating some stocks here within across private PSU banks or even the financial services space? What exactly is still weighing on the sentiments as far as this space is concerned, and when do you see a strong reversal?
So when you look at the banking sector, over the last 1 year, the sector has seen significant headwinds. And I must admit that not all of the headwinds have gone away for the sector. Credit growth, for instance, still continues to be in the range of about 10-11%. Deposit growth has also remained muted, though now the gap between deposit and credit growth has narrowed, and that has caught up. With rate cuts, there will be some incremental margin pressures because as banks cut lending yields, the repricing on the deposit side happens with a lag. So near term, you will possibly see some amount of margins coming off because of rate cuts. Asset quality has been patchy in parts, which means that some segments of unsecured lending, MFI, etc., have seen higher stress and higher credit costs. Now, in this sort of an environment, our belief is that the large private banks are still very well placed. Here, risk reward is in your favor. valuations are below their long-term average multiples on a one-year forward price-to-book basis. Return on equity for this segment is higher than what it was 5 years ago. These banks, remember, are well capitalized. They have high provisioning coverage ratio. And also, despite asset quality stress in some pockets, these banks have well diversified loan book, which means that their credit costs have also been largely stable. And they continue to grow slightly ahead of the industry as far as loans are concerned. In this sort of an environment, our hope is that liquidity starts to at least improve from current levels and regulatory action possibly helps in that form. And in overall, as a pack, the larger private sector banks should be better placed, especially given their current valuation. So, with the respect to the rest of the segment, some of the large PSU banks will also be fairly well placed and valuations have also corrected. Within NBFCs, we have been selective. We've looked at some of the larger NBFCs with a more diversified loan book with strong parentage and capital, which are today trading at reasonable valuations. But overall, in the banking sector, the preference is for the larger private banks and a select few large public sector banks, which appear to be better placed in this current environment, given that there are some headwinds which still remain.
Okay. The other space is IT. Again, that's been facing a lot of volatility. That is being also facing a lot of uncertainty again from the external shocks again. What is your approach here in the IT space? How would you assess the current valuations and the opportunities going forward?
So IT as a sector was, in fact, outperforming, but of late the sector has seen some degree of underperformance. But our thought on IT is twofold. One, we believe that for Indian IT services player, the adoption of AI and as overall globe moves from just talking about AI to actually adopting AI as far as their businesses are concerned, Indian IT services players have a large role to play, especially in terms of data migration to the cloud, in overall integration in terms of enterprise level AI integration. So all of these means that there is a long-term opportunity set for players who are able to adopt and able to provide solutions to their clients. The second is what's happening in the near term. Our belief is that incrementally discretionary spends should start to come back. In the last 3 years, we've seen that discretionary tech spends have been virtually absent. The pace of improvement will be slow and gradual, so it's not going to be a V-shaped recovery. But in large verticals such as BFSI and in North America, especially some of the North American banks, we have started to see increase in terms of tech spends and tech allocation. That should be beneficial for Indian IT players, which have a large part of their revenues coming from that segment. Most importantly, despite what's happening globally and in the US, if you look at the health of the large North American banks, the health of those banks have been fairly good, which means that some of the discretionary tech spends should start to come back. Now, again, there is a lot of noise and news flow around the sector, especially with respect to what's going to happen to the US economy, tariffs, etc., which is possibly weighing on the overall performance of the sector in the near term. But net, we believe that if you look at some of the large IT players, valuations seem to be reasonable in context of where Nifty is. And even within the mid-cap space, now that we have seen some amount of valuation correction, one can look at stock-specific opportunities within the technology segment.
Okay. Shubhani, are there still any pockets which actually need investors to continue to have caution on at this point in time as well, despite, the excesses probably out, despite the fraud, the top layer fraud already out? Is there still some more pain to be had in some of the pockets and where you would advise investors to stay away from it, even at the current stage?
So I think it is more now stock specific. In some segments, while stocks may have corrected from their 52-week high, valuations in context of both their history as well as the market, in some segments, stocks are still, in terms of valuations, trading at multiples which appear to be rich. So that's one factor that we will have to look at. Secondly, we also have to look at earnings, right? So if you look at, in fact, the last quarter earnings, large cap earnings, though muted, were largely in line with estimates. Mid caps were fine, but small caps actually saw significant disappointments with respect to earnings delivery, especially in context of what was the expectation for the quarter. So I think there have been a lot of earnings downgrades within stocks, specifically in the mid and small cap segments, which one needs to keep in mind when you're looking at valuation as a construct. So that's something that I would still be a little cautious on. Overall, if you look at from a sectoral perspective, one is that we stayed away from commodities and metals as a pack. Obviously, there is a lot of talk about what China does, especially with regard to supply, where metals and the entire steel pack is concerned, which can have a bearing. But at this point in time, when you look at the global growth outlook, including the growth outlook coming in from China, it does appear to be fairly muted, which is why we've been cautious on metals as a pack. Within the oil and gas segment, here valuations have corrected quite sharply. However, one must remember that it is likely that oil prices stay range bound and muted, and hence one has to be sure of the segments within the oil and gas space where one can look at incremental opportunities given current valuation.
Okay, fair point. Well, I'll also want to ask you, since we are celebrating Women's Day, and I wanted to understand from you if you could give us, a broad range of the kind of stocks that women who are considered safer investors or risk averse investors that they can bet on. The first thing that most women investors in stock markets would say is, give me a stock that is, not very risky, and give me a stock which is not very volatile. So, I'm okay with lower returns, but it's okay if my money is safer in those stocks. So do you have a broad range of stocks that you could be able to advise all our women investors who have a long-term vision? Where should they be putting in their money?
So it's very difficult to say that this stock is not risky or the stock B is risky. So one thing that one needs to keep in mind is that when you are doing stock picking, you need to have dedication and your ability to conduct in-depth research. And what I keep telling most of our investors is that if you don't have that dedication to look at stocks in depth, to read annual reports, to understand balance sheets, cash flows, earnings, and valuations, management quality, then you let the professionals in terms of the mutual fund industry help you, and you look at mutual funds as an alternative to look at individual stocks. As we were discussing earlier, my mantra towards investing remains that invest for the long term, do your research, avoid trading in and out, look at investing over trading. So it's very difficult to really generalize and say, this segment of stocks are something that are, less volatile and something else that is more volatile. I think what we've also seen, and if you look at markets over the last 20-year period, every year or every few years, there is considerable amount of sector rotation. And that's where, again, research comes into play. I think research is the backbone of stock picking. Look at fundamentals, look at cash flows, look at bottom line, and do your work. And of course, as we say that when you look at stocks, you are not just buying stocks, you are buying businesses. And therefore, be able to evaluate a business in terms of its scalability, sustainability, as well as management quality.
Fair point. I hope this has really given all those points to really identify the right investment opportunities to all our women. There's one question that we've got from one of our viewers, and I'm going to be putting that across to you towards the end. And this is from Sunita Yadav. She is from Kuravali in Uttar Pradesh. इनका हिंदी में सवाल है, so I will just say it like that. क्या हम स्टॉक मार्केट या फिर क्रिप्टो मार्केट में ट्रेडिंग को करियर बना सकते हैं? ये सवाल आया है हमारे पास सुनीता का. क्या आप कहना चाहेंगे, शिबानी?
देखिए, क्रिप्टो मार्केट में तो मेरा कोई व्यू ही नहीं है, तो वो मार्केट मुझे समझ में नहीं आता है, तो मैं क्रिप्टो मार्केट के बारे में तो कुछ कह नहीं सकती. स्टॉक मार्केट जैसे हम डिस्कस कर रहे थे, ट्रेडिंग ओरिएंटेशन नहीं, इन्वेस्टमेंट ओरिएंटेशन होना चाहिए स्टॉक मार्केट के लिए. स्टॉक्स में आप जब इन्वेस्ट करते हैं, एक तो आपका कैपेबिलिटी होना चाहिए कि आप उन स्टॉक्स, उन बिजनेसेस को समझे, लॉन्ग टर्म उन बिजनेसेस के आउटलुक को समझे, और जो कंपनीज के मैनेजमेंट है, जो कंपनीज चला रहे हैं, उनको समझे कि उनका विजन कैसा है, उनका एग्जीक्यूशन ट्रैक रिकॉर्ड कैसा है. तो स्टॉक पिकिंग में काफी रिसर्च होता है उस स्टॉक को समझने के लिए. और अगर आपके पास रिसर्च कैपेबिलिटीज नहीं है, या आप उतना टाइम डेडिकेट नहीं कर पाते हैं रिसर्च, तो म्यूचुअल फंड्स आर ऑब्वियसली अ बेटर वे टू लुक एट योर लॉन्ग टर्म इन्वेस्टमेंट होराइजन.
ओके गॉट दैट आई होप सुनीता जी आपको अपने सवाल का जवाब यहाँ मिला होगा बहुत बहुत शुक्रिया थैंक यू सो मच शिबानी जी फॉर बीइंग विद अस on the show and I wish you
Thank you
yet
so much.
again a very happy International Women's Day. May this year turns out to be a great one for you and for your loved ones as well. So thank you so much for being with us and we look forward to having you more often on Business Day.
Thank you very much, and lovely to be on your show, and look forward to the next interaction. Thank you.
Thank you so much, Shivani. Let's look at the markets yet again and see how we have shaped up. Just about 20 minutes, 25 minutes of trading action. It's been kind of a volatile move so far. We've again slipped into the red, 0.2%, 0.3% lower now, 22,487. That's a 60-point near dip that we are seeing on the Nifty. Not just that, it's even the mid caps are now lower in trade. Even though there is a contrast there, small caps still about half odd percent higher, but the mid caps lagging 0.07% lower in trade. We are also looking at the Nifty Bank that's on the back foot today. Apart from that, if we look at the sectoral action, in the first 25 minutes, you'll find that the banks have slipped, financials, even the PSU banks have slipped, private banks have slipped in trade. Autos, however, are still in a better zone. You can see almost a half odd percent uptick on this one. Metals continue, albeit not in the same vigor that it went in last 2 days, but about half odd percent higher in trade. IT, FMCG continue to be on the back foot. Pharma on the back foot, so the defensives are not participating. You have some green as far as real estate space is concerned among the key stocks. Then let's look at on the Nifty again. You have stocks like BEL up and about 2% higher, of course, order flow inflow. HDFC Life, Bajaj Auto, Hero Moto, Tata Motors. These are the pockets that are actually holding up in trade. You have Tata Steel also that's bouncing back. You have Reliance Industries and many other such stocks that are supporting the markets. But on the downside, the pockets that are still weak. IndusInd Bank that continues to reel under pressure. You have HCL Tech, BPCL, NTPC giving some of their gains of yesterday. Shriram Finance, Infosys. So the IT pack and some large private banks that are still on the back foot as far as the heavyweight stocks are concerned, which are not really contributing to the moves today. Looking at some of the other pockets within the small caps, which is the green zone, let's look at what are the pockets that are actually showing us some traction today. Data patterns is strongly up in plate. You have about a 5.5% higher on this one. You have Triveni Turbine again, second day in a row, 4.5% higher. BEML, Reddington, Keynes Technology, Hind Copper. So mix of all those interesting names that are up and about. Railway space clearly seems to be in action. Even RITES is up in trade. Triveni Turbine. You have Ircon International that continues to be on a high zone. JWL. All of these stocks are actually buzzing in trade today, while on the lower end, you have stocks like AG's Logistics, IIFL, Jyoti Labs, Lalpath Labs, Laurus Labs, that's on the declining zone today. Within the small cap basket, let's look at the Nifty 500 space. Again, flat with a negative bias on the index level, but this is the broadest set of the index. Again, here you will see names like Quest Corp, you will see Kirloskar Engineering again on the higher side. There is DB Realty, Spark, Reddington, Keynes, all of these stocks that are buzzing in the first half an hour of trade as we are looking at. Remember, viewers, we are now looking to welcome another top guest on the show. It's the Women's Day special. So we have all the top voices of stock markets joining in and sharing with all of you what exactly should your strategy be when it comes to stock market investments. Let's welcome a very special guest. Ms. Amisha Vora joins in, the chairperson and MD of PL Capital Prabhudas Leela. Warm welcome to you, ma'am, and thank you so much for joining in. I wish you a very happy International Women's Day, and I hope that you continue to inspire millions of women when it comes to their investment journey, the way you have been doing so, over the last 2 decades, 3 decades odd. Tell us, the first suggestion or advice that you want to give this Women's Day to all the women investors who have just taken to investing this time.
Happy Women's Day to you. Sakshi, you yourself are a phenomenal example of what women can achieve. And you keep inspiring and helping day after day to all the audiences, male and female. But I would definitely say that women who are who have not yet started their journey, who are still thinking, it's very, very important. I always feel and say that whether you are a working woman, whether you are from a very, very wealthy and established family, or you are the one who is really running the show, to plan your finances, know your finances, and secure your future. Because this is absolutely in your own hands. Nobody can really dictate or decide your security of financial future. Once you start that journey, you realize that a very important worry that everybody keeps is planned well, is behind you. It gives you so much security and basis that financial independence that you achieve. It helps you take many major decisions in life also. And it's a three-step journey. Financial planning is a three-step journey. First step is savings, because without savings, you don't convert it into wealth. Second important step is risk mitigation, which means insure yourself well. And of course, the third important step is put it for long-term wealth generation. Any speculative activity can also be a big risk to your savings. So if you adopt to these three principles, I think that you will be flying and achieving all your dreams.
Wow, that's wonderful. I'm hoping that everybody is noting down all of these precious points. This comes from a wealth of experience that Amisha ji has had in the investment world, and this will greatly help you in your long term achieving for your life goals and financial goals as well. So, Amisha ji, tell us what role does stock market investment, equity investment really play when it comes to the investment journey that women are setting on to do? We've always seen women as risk averse investors. Somebody who wants to really know that, okay, if I have lesser return, I'm fine, but my money should be safe. So largely they used to invest in FDs or maybe buy gold jewelry. Slowly and gradually, we are seeing more and more women wanting to take risk with their money, go ahead at those equity, investments as well, which were considered as riskier assets. Nowadays, everything, in this current scenario can be termed as risky. But what is it, that you would tell them if they want to explore equity investments? How should they go about it?
So, Sakshi, the first principle is when you put your money into a savings bank account, it is still savings. It's not investments. Purpose of investments is wealth generation, wealth creation. You can generate wealth or create wealth only when your investments grows higher than inflation, which means that some portion of your money has to be in equity. Equity is the only asset class that typically on a longer period, no decade has gone when equity has not beaten inflation.
Yes.
Globally and in India. So you have to be in this asset class. Now the choice is you have to decide amongst three things. I would always say that all the starters who do not have invested, who have not have enough time or invested enough time to understand the nitty-gritty of markets, first choice is mutual fund.
Yeah.
Even if you put, based on your age and risk profile, 40, 50, 60% of your savings into mutual funds, you will be so much more better off in your wealth creation journey. It's only when you have some time at hand, you do some courses, you understand what are the nuances of direct investments or direct trading, that you start indulging into markets with your money directly.
Okay, so Amisha ji, if somebody really wants to start off with direct investments, if somebody has, explored some mutual funds, what is the best way to identify? I'm sure, experts like yours, firms like yours do guide a lot of women, so they can approach people like you and your companies to really get them the assistance. And that's the first and foremost that we also suggest, that first find a financial expert for yourself. But if somebody is really trying out, with so much of information now widely available on social media, I'm sure a lot of people are already taking risks with their money on an everyday basis, looking at stock tips here and there. So, one side of caution I want you to give them, and the other side, what is a better way to approach direct stocks? Are there any, safer stocks or long-term stocks that one can really bet on? Should one absolutely look at the large caps, and you would not go very wrong there? How should one really look at that space?
So there are, once again, when you want to indulge into direct investing into stocks, as what you very rightly say, either invest time and learn the ticks of the trade, which is not going to be as easy. As you know, that many professional investors also find it difficult to beat the index returns.
Yes.
And it's a full-time job. But secondly, at least have a proper research-backed financial advisor to your help, because making returns out of markets is not only about the right stock, it is beyond about your right mindset. How to navigate difficult times and stay invested is really the art and science of making money. So the right financial advisor will hold your hand through this journey of pain and gain and make you be a winner in longer term. Once we boil down from that to looking at the markets, in different market cycles, the weighted changes between large cap, mid cap, small cap, as each of these has different risk profile, liquidity profile, and
Yeah.
growth profile.
Wow, that's wonderful. I hope this has given a lot of clarity to our viewers who are actually looking at direct stocks and equities as an investment form. I hope you really take this down as to what is the right approach, so that you protect your money as well as are able to, create alpha for yourselves as well. Amisha ma'am, we have a caller with us. We've invited some callers also on our Women's Day special show. So we'll go across to Swati from Jalandhar, who's on the phone line with us to ask a question from you. Hi, Swati. Happy Women's Day in advance. We're celebrating International Women's Day. Go on with your question. What do you want to ask our expert today?
You, ma'am. Happy Women's Day, both of you.
Thank you.
Happy
Tell me,
Women's
Swati.
Day.
मैम मैं पूछना चाहती हूँ कि मेरे को सिप सिप प्लान करनी है। जैसे मार्केट बहुत ज़्यादा टूटा हुआ है अभी, तो
जी।
मैं कौन से फंड चूज कर सकती हूँ? एक तो मैंने एचडीएफसी का फ्लेक्सी कैप चूज किया है, उसके अलावा मैं कौन से अच्छे फंड हो सकते हैं जिनमें मैं इन्वेस्ट कर पाऊँ?
बहुत
देखिए,
अच्छा
आप
सवाल
तो
है
ये
स्वाति जी आपका। और अमीशा
एक तो
जी डेफिनेटली यहाँ पर आपको राय देंगी, क्योंकि इन्होंने काफी समझदारी से चुना है। फ्लेक्सी कैप पहला इन्होंने अपने लिए चुना है।
करेक्ट।
तो अमीशा जी क्या कहना चाहेंगी आप इनको?
एक तो आपको बहुत पहले धन्यवाद देना चाहूंगी कि जब मार्केट गिर रहा है तभी आप में वो पेशेंस और डिसिप्लिन है कि मुझे पैसा डालना चाहिए. सो यू डिजर्व अ ग्रेट एप्लॉज फ्रॉम ऑल ऑफ अस, ट्रस्ट मी.
अमेजिंग।
एंड यस, एंड सेकेंडली आपने फ्लेक्सी कैप चुना, तो आपको वो भी समझ है कि ये मैं फंड मैनेजर को डिसाइड करने दूं कि लार्ज कैप, मिड कैप और स्मॉल कैप में क्या एलोकेशन करना है. तो यस, ये आपने बहुत अच्छा काम किया. अब इससे ज्यादा थोड़ा अगर आपको अप्रोच लेना है तो आप एक हाइब्रिड और मल्टी एसेट फंड में भी डाल सकते हो, क्योंकि वो भी आपको बहुत अच्छे से प्रोटेक्ट करेगा और आपके पैसे को ग्रो भी करेगा. तो यू कैन चूज फ्रॉम एनी ऑफ दीज म्यूचुअल फंड्स, मल्टी कैप एंड अ हाइब्रिड फंड.
ओके तो स्वाति जी, उम्मीद करते हैं यहाँ पर अमीशा जी की जो राय आपको मिली है इसके बारे में आप जरूर रिसर्च करेंगी और हाइब्रिड और एक मल्टी एसेट फंड डेफिनेटली आप अपने लिए चुनेंगी और उसमें आप निवेश करेंगी. वी विल होप टू सी यू बैक very soon on Business Today once you have done that investment to guide you further on our other shows. So we have, I hope, clarified a lot of doubts when it comes to investors queries. But Amisha ji, now I have to ask you on the markets as well. What is your own understanding? 5 months of pain is what we have already seen. What is it that you are gauging? Do you think we are near a bottom? Is the worst behind us? Are things going to be back on track? What is it that you're approaching the markets with the hope?
So, Sakshi, I personally feel that it's a very, very fortunate time to invest because we are demographically one of the best economy. Balance sheet wise, be it government, banks, corporates, or individuals, we are still very sound and safe. And our reforms, any which way, are underway to unleash the power of growth. Now we came across a bump wherein the government capex slowed down, banks tightened a bit, and inflation inched up a bit. All three led to consumption and demand slowdown. That got coupled with the tariff worries. So we have shred almost 18% plus on the markets. And whenever that happens, as you know, 35, 40, 45% of the stocks is out. As we see what is really happening on tariff front, my own understanding is that whatever steps may be taken, it cannot hold dollar so strong.
Yes.
It cannot keep inflation at bay in US. And as those two aspects come, the whole shift of money from emerging markets to global markets, which has happened, which has also impacted us for last 5 to 6 months incessantly, will stop. Now we are at that juncture that confidence is a bit low. So any negative news is slightly more pronounced. And there will be a time of these few months when the opportunity to invest at saner level will keep emerging. But am I at all less bullish on the medium-term outlook of Indian markets? I am not.
Okay.
Second important thing is from tariff perspective, on China, 20% across the board tariffs are already levied. So take an example of pharma, API, CDMO. Now, all those sectors, even if reciprocal tariff is laid in India, it can't be more than 9 to 10%. So straight we got 9 to 10% competitive advantage against China is what my broad understanding tells me. Similarly, it will happen on textile. And there will be so many items. This will happen. This will give Indian industry time to catch up with global markets and exports and also shield their own markets. So there will be winners and losers within the sectors broadly in Indian industries during this tariff war. But net, I feel we have huge domestic demand. Plus, we have got a shield against competition from China in many industries through this tariff war. So I remain positive and I feel this would be the times to invest and we will make money over a medium term.
That's a wonderful, advice there. A bullish outlook in the medium term, and therefore this is a fortunate time, the right time to start investing. We will also request you, ma'am, to share with us the key sectors that you're most bullish on and the stocks that you have probably started to accumulate in this fall, which look attractive to you, and where would you guide investors to really look for strong gains over the medium to long term, ma'am?
So I would say that particularly defense sector is totally domestic order book focused. And once the order comes, except for a 1 or 2 quarters here and there, the money is also secured, the the spender is going to give money. So defense ancillary, the visibility continues to remain very strong, and that's why one sector which I like within the capital goods and manufacturing. Similarly, uh, apart from that, of course, there are select railways companies,
Yes.
which I say, which are Kavach related, where the order book is so solid. Order books are almost 5 times sales or more. And this is profitable businesses. So I feel
Hmm.
they will also bounce back with strong earnings visibility. As I go down, there will be many within the manufacturing who are winners, but I will now shift to consumption. And I feel that the budget booster will start looking, showing up sometime second quarter onwards. And
Okay.
a lot of domestic focused, say, branded fashion or consumer durables. I'm not saying consumer, fast moving consumer goods.
Okay.
Beyond that, will start doing better. And third, I would go into pharma. And fourth, I will go into banking and NBFC, because the liquidity which had killed the
Yeah.
growth and impacted across has started coming in a bit. So, in this order, I think the earning visibility will continue to unfold and markets will continue to respond positively to these three, four sectors.
Thank you so much, ma'am, for sharing your wonderful insights. It's always a pleasure to host you on Business Today Television, and it's a masterclass in itself whenever you come in and explain all the aspects of the markets and investments to all our viewers. So we hope that you please keep coming more often on the channel to guide all our viewers of Business Today. Here's wishing you once again a very, very happy International Women's Day, and we will continue to look up to you for all the inspiration on investments, ma'am. Thank you so much for being with us.
Thank you so much for inviting me.
Thank you. And with that, viewers, we will start looking at wrapping up the markets for the morning edition of Markets Today. I hope you've actually got a wealth of knowledge when it comes to stock market investments from all our top women investors and experts who've come in on the channel today. We will be playing separate chunks for all of them throughout our YouTube platforms and social media. So go back and check on them, because you need to really listen to them more often and repeatedly, so that you do not miss any of the points that they have really guided you. These will be really handy when it comes to long-term investments. 22,554. So the first 45 minutes out, and we are inching back to the green zone as far as the Nifty is concerned. So that's a bit positive. After those initial hiccups, we are seeing some crawling back above 22,550. Let's hope that this sustains for the better. Let's look at the Nifty Bank. That still seems to be at least on the back foot when it comes to the Nifty, 0.2% lower, but that's also improved from the day's low. So let's see whether that also improves from here on. Let's look at the top Nifty gainers and see where the momentum is building on at this point in time. You do have a lot of names that are coming from insurance majors like HDFC, SBI Life, but Reliance is the one that's really pulling the Nifty today. 1230 now, 1.7% higher. That's the one that's coming back strongly. You have Hero Moto that's also pulling up in trade today. You also have the mid caps, by the way, that were lacking behind are now participating well. So the mid cap stocks are also doing well. Bajaj Auto, Tata Steel, these are the other stocks on the gaining side. Hindalco, Axis Bank, L&T on the Nifty. Let's look at the mid cap index and those mid cap movers in trade. You are seeing a lot of move as far as the mid cap names are concerned right now. 0.3% of an uptick. You can actually see it's now at the day's high. It was lagging behind the small cap space, but now it's coming back. 49,518.3% up in trade. The entertainment is up 4% today. So the media stocks are doing well. Whirlpool Container Corp. Whirlpool again belongs to the consumer durable space that Amisha ji was mentioning, where she is positive on. You have a lot of defense and railway space that she was mentioning that are inbound sectors, domestic sectors, building well on order inflow as well. And you're seeing the momentum return to across the board on defense and railways as well. So keep an eye out on that. Stocks like Mazagon Dock, that's really riding high. You can see BEL that's moving up in momentum too. You also have railway stocks like RBNL, Jupiter Wagons. All of them are up and about. You have IRCTC. These are all the stocks within the defense and railways that are catching on to momentum. Well, we will leave you at that, but stay tuned on to Business Today television as the market coverage continues throughout the course of the day. Stay tuned with us, and many thanks for tuning in on today's Women's Day special.
Furthering to Belgian Economic Mission Delegation to India, I am joined by David Jordans, who's the spokesperson of Belgian Ministry of Foreign Affairs. Pleasure to have you here on Business Today.
Thank you very much.
Sir, this visit now, you've come to Mumbai. Now, what are the main focus of the economic ties of India and Belgium?
Well, the priority sectors for this mission